All right. Today, January 18th, 2026. Um, Another weekly forecast. I hope trading so far this year has been going good for you guys. I know last week was a major week. Either side you were on, so I know a lot of people did well. I know some people had some unfortunate run-ins, but new week, new day. New sessions, and we just try to make some money together, guys. So much has been going on. There's really so much to talk about. I'm really going to try not to make this video very long. But I have a bunch of pairs. There's almost setups everywhere. Um, so let's just get straight into it. Bonds. We always start with bonds. Um, So when we're looking at the bonds, right now what we have is a divergence on the weekly between the 30 year, the 10 year, and the 5. So you can see here we had our 30-year run, our previous week high, and we created the SMT divergence, whatever you want to call it, um, between the weeklies. Now we've taken previous month low on the 10-year note and the 5-year note. Um, and this was expected. This is what we expected a slight push on the 30, and we expected to see the 10-year and the 5-year note drops. So what I've actually done is I've outlined some targets for the bonds. Um, and I've used a standard deviation. What we call in trading is a standard deviation. It's not. This is not the correct terminology for standard deviation. The standard, well, I'm not even going to get into all that because we just have so much to explain. I'll go over. But between 4 and 5 is typically where a leg of price runs out, and you can see a reversal. So this is why I've put this as a potential target on the 10 year, and I have this as a potential target on the 5-year note. As you can see, we had a stop run here, over here on the 30 year. So we could come here. I don't typically expect us to run all of these lows. This is quarter 3 low for the 30 year last year. This is quarter 3 for the 10 year, and quarter 3 for the 5-year note. Now we could come get quarter 3 here, and from this point is where we could see a reversal, a massive reversal. I don't know how long it'll take to get here, but we could be bearish for a little bit. Or we could see a reversal right after. We could sweep one of these lows. We're not trying to predict with bonds. We literally are just analyzing, and we react from here. But right now, more bearishness on the bonds equals more bullishness on Dixie. So let's get into Dixie. Now, I actually really want to talk about Dixie kind of in depth a little bit. What we have, if we're looking at the year, this is the yearly, right? And I've kind of marked up a little bit of um, a couple of things. But if we look back on Dixie, and we are viewing our 1985 high, crazy, right? If we're using structure on the yearly, right? Right here, the break under this line or under this area, that's your technically your change in the state of delivery where your order block is created, right? But to me, I don't use structure so much on these higher time frames. Um, it's just it, we're slowly going to be finding ourselves, especially as Americans, if you're in the U.S., in a world of trouble in the economy. The dollar is going to crap, right? It's going in the toilet, and there's nothing that can be done about it, especially with this guy in office making all these. It's just these moves are insane. Um, but what I would like to view right now is just this. This is my range here. This high to this low, right? Because after we've broken this low here, after we close below here, this high to this low, this now becomes my my externals, right? So what we've done is we've just come back into the range and come back into premium or whatever you want to call it from here. Let me remove this because it's in my way right now. I'm just going to take it off. All right. So what I've done when we get here, look right here. We've taken previous year high last year, right? So this is 2024. We took that, we swept that, we souped that, and closed below. Crazy bearish year for the dollar, right? Now, what I do expect is more continued bearishness, right? And that's why I have my yearly target as here. Now, some people will look at this gap right here and say, oh, we're in trapped order flow. But I don't even know what that, I don't even know what, when I see that, what are you talking about, right? This is not trapped, right? Price is not trapped, you know. Price is going where it's going regardless. Regardless if your fair value gap is sitting there, regardless if your supply and demand zone is up above or below, regardless if your order block is here, price is going where it's going, right? And every fair value gap isn't to be respected. Every order block or demand zone or supply zone isn't to be respected, right? This gap was created from nothing, right? There no liquidity swept, um, uh, no higher time frame um, PDA or whatever you want to say, point of interest contact or hit. It's irrelevant to me. This gap pretty much is irrelevant to me. It's just a speed bump until we get where we're going. So once we swept that here, I'm bearish, right? I'm bearish on the yearly, on the 5 year, the 10 year. I'm bearish, and on the yearly, right here, right, I'm bearish, right? So let's go down to the 3 month, right? So from here, right now we haven't quite taken what would be considered, I guess, your order block or demand zone, whatever. Now, on these higher time frames, I'm looking at whatever candle took liquidity, right? Which would be this candle. So for me, once we close below here, this to me signifies bearish confirmation, right? And so now what I have is this area from here to here, right? Let's go to quarters, right? So from here to here. Now I do expect some bearish prices. I'm sorry, bullish prices upcoming, right? Let me just remove this for a second. I expect bullish prices upcoming, and so from here, I marked out our previous year EQ, right, in this range, and so we could see prices run up to this area somewhere around here. It doesn't have to, right? We don't have to always come back into discount or come back into premium, right? But I would like to see us at least come somewhere close to this area, right? I'll be monitoring from here for any type of reversal, but I would like to come up here and then we monitor for any type of reversal pattern, right? On the monthly, the weekly. What I typically would like to see here is I would like to see a weekly soup and then a weekly gap created. And from that point, I would be bearish until further notice. Let's get down to the monthly. Let's break it down to the monthly. Okay. So on my monthly, all we're doing is we're in the middle of a consolidation, right? But right, because we swept this high and we are failing right now to continue lower, right? Failure to create gaps. Anytime there's a failure to create gaps to me, it just signifies either we're going to consolidate or it's not a true reversal. So again, to me, it looks like we're running higher. We swept this low, and now I'm anticipating higher prices. So on the monthly, this is considered your your order block, demand zone, whatever. I'm just gonna say order block, and I'm saying supply zone. I'm sorry, but I'm just gonna use order block just because it's easier. It's easier just to for the terminology. So 2024 high. This is my range that I'm in. Looks to be coming up here. Now, some people look at this gap and say, "Oh, we come up here in the premium, we'll fill this gap, right?" That's ideal. That would be ideal. However, we don't have to, and we don't even have to come back to premium at all. Um, but on the weekly, all I'm doing, or I have all my quarters marked out already, right? So what we're doing, we distribute it all the way down between, I mean, really the whole year, especially quarter one, quarter two distribution. And now we're we are accumulating here, but I expect our accumulation to start rising up to this area. So I'm very bullish on the dollar right now. And as you can see, I've kind of marked out what could happen, what's possible. Um, but again, I'm trading towards this. When we get there, we get there. I'm not concerned so much about where we turn around from. I'll monitor that when we get there. All right. Um, so that's really it on the dollar right now. I don't have to go any lower than that. If I take it down to the daily, I'll tell you what I don't like though. I don't like this, right? You never really want to trade away from this. Um, so, but as long as we keep breaking structure, you know, let's see here, you know, here, here, we can just do this, all the way up. You may get something here, false run up here, up, fake run here. Uh, that's all speculation, and that's not important. And with whoever we have in office right now, you never know. You just never know what's going to come. So anything could be affected. But let's just move on from here. Right now, bullish dollar. So we're looking at. Let me just start with the weekly. We're looking at more bearishness here. Um, and the reason I like EU, um, is just that it's becoming the weaker pair between EU and GU. Um, and GU's a little cleaner to trade right now, but EU's just been falling off the map when it falls. So I'm targeting I'm targeting these failure swings here, and this is also a target this low for me here. Um, if we get down to the daily, we've had we've had our divergence here, right? So as you can see, in this range here, let's go here. All right. So in this range here, we got a little break of structure right over. Right. All right. So now you have a range here to here. All right. If I'm bearish, right? If I'm expansion bearish, I don't want something coming back up into premium and then going, right? I want it to respect this because we don't want some big retracement. So if we're going to be bearish, continue expanding, I would love to see we listen weekly open. We could bounce off of that. There's a weekly gap here, right? We could touch. We closed inside this daily. We closed inside here, so we could, we literally could come up here, um, make a move and run down. The only reason that I am looking at something which we may get something that looks like this is because Trump imposed a 10% tariff on a number of countries: France, Finland, Norway, Sweden, Denmark, Germany, Netherlands, and the UK, because of Greenland, right? And these tariffs will increase to 25% on June 1st if a deal to acquire Greenland isn't reached. We could see we could literally see all of these countries and their currency bottom, just fall off the map, um, because of this, initially, right? So the in France you have franc, in Sweden you have the Swiss franc, um, and in the UK, um, you know, you have the pound, and you know, and some of the other countries, the euro. So it just the trade implications alone, the currency is going to get tight, and I, I I'm inclined to think that we're literally just gonna keep falling. How fast, how far, don't know, don't care. Um, I'm just trading it as I see it, but I'm more bearish prices. And for the pound, uh, same thing, right? And oh, I had this up for someone else. Let me just remove all of that. That was December's candle. I'll leave that. Same thing, you know, just more bearishness, right? So, you know, you've had your breaker structure here. We had a monthly sweep on, like you can see on these here. We've had a weekly. If I go down to the 4 hour, right? You've had your weekly sweep here. We tested this block. From we respected 50%. We actually respected 25% of that. All right. Where's my quarters? Respected 25% of that wick. And I just expect more bearishness. So eh, there's nothing bullish about any of these currencies right now. If you're going to trade counter trend and you're going to try to take scalps back up, let it be just that. Let it be scalps. Don't try to get cute. Don't try to catch reversals. Um, you're gonna smoke your account, right? Just, you know, take your wins. Take your wins. Take your wins. Now, man, this is this is really where the money is going to be made at, because of BCom, right? And they have to get in accordance with BCom. All the hedge funds and mutual funds and everybody else that follows, you know, the Bloomberg index, right? They have to be in line with them. And so you have banks, Bank of America, Citibank. They're over $4 billion short on gold and silver, right? Silver in particular. And and the reason is because they know these things. They know that all of these places have to rebalance. Now the problem is the price keeps going up. Silver's being squeezed because people are wanting um, uh, physical delivery of their contracts, right? So in futures, you have a paper contract, and people roll it over, or you could just, when you buy and sell, you don't have to take physical delivery of the cocoa or the oil or the cows, but you technically can, right? So if you have a contract for some cows, you can say, hey, drop my cow off at my house, right? But what's happening is the paper, the paper contracts aren't being respected, and people are wanting physical delivery. The problem is there is not enough supply of silver to meet that demand, right? Everything's getting squeezed, especially silver is something I would honestly, let me go over the chart first, but I'm looking to buy this off the open. Like this is a crazy chart, number one. Like this is insane. Um, if you'd have bought silver last year, and let's see, last year, just a year ago, where are we at? Oh, I'm all the way over here. So silver was trading at about $22 an ounce, right? Now silver's at about 90 an ounce, right? Where is it? Yeah, 90 an ounce. All right, this is going to squeeze, and when it squeezes, this is going to squeeze up here to 150, 155. Um, so, I, man, listen. I don't know if you have physical silver, hold on to it. If you're trading silver, I wouldn't be looking at anything short. I was short last week because of this rebalance that has to happen. But right now, I'm actually expecting. a move up first before we come back and rebalance, because they have until January 31st to get in line, to get in accordance. Um, but so I am actually expecting some type of pump up here. You might not even get this pullback, honestly. It's just you might just it might look something like this, right? Something like that. And then you'll get a drop, right? And then from here you get, you may get a drop uh back into a range. This is fake. This is false. Whatever this is not real, right? This is not real. This is not real, right? Once we switch out of here, right, now we're back to business. This is so ugly. My bad, guys. But once we move and we shift structure here, we're back into business. And this is getting squeezed. This is definitely getting squeezed. Same thing for gold. And that actually makes me think that like this announcement of war is actually going to come soon, because when war is announced, they put the money into physical assets such as silver and gold and platinum, nickel, copper. Um, but make sure you stay on it. Check your silver chart, check your gold chart every single day. I'm not even going to really I don't have to go too far into it. Um, but so just well, I'm here. Fuck it. So on silver, for those who trade patterns, here's your three candle pattern, right? SMT here. We respect it. Look, we've been respecting the upper portion of this range. Actually, you know what? Let me put the quarters on and see if we were respecting 25%, right? Look at that. Have not even closed below 25% of this range. I don't expect us to. Um, I personally, when the market opens, I'm just going to mark it here, and wherever silver goes from there, and I'll just let it ride for the week. And if it's a loss, it's a loss. But I don't think we come back and see anything in this range, right? Um, Gold. Let's go to 4 hour. Gold. We just had a little stop run here. We took out. We rebalanced this gap, right? And if you want to say, for those who trade ICT, I guess this would be your breaker right here, or whatever, a breaker entry. So and once we shift here on the 4 hour, I would be buying gold also. And that's pretty easy. Um, let's go over to the basket. All right. So the basket is crazy. JPY is getting crazy. It's just dumping and dumping and dumping. But what we've done is we finally caught this 2024 low, right? So we just ran this out, right? Closed inside. I do expect some bullishness from here. This is a higher time frame target for me. I don't even know if we get there this year, but um, but yeah, right now I just expect us to start maneuvering up a little bit. So you could see another slight push down. Let's go to the weekly, actually. Um, you could see another slight push down. We maybe dig into this gap a little bit. Well, this wick, and then we start moving up. Right here could be a first target. You have these equal highs here on a lower time frame. Um, oh, already got marked out. So anyway, um, we have this gap that could, provide us with a little bearish movement to create. Maybe we get run up here on a Monday. This creates a gap for us to continue higher, right? And then I don't know what happens when we get here. Maybe we see lower prices. Maybe we come back up. Don't know. Not my issue. We'll see what happens when we get there, right? But for now, this is how I'm looking at, or this is how I'm watching JPY pairs. But specifically because of these tariffs and what's going on, um, I'm looking at futures as well. So when I'm looking at well, I'll tell you what, we'll come back to that. USD JPY. This is one of the pairs that I'll be looking to short from, right? We are so deep into this range right here, right? I wouldn't be surprised to see us. We could sweep out this low. We could sweep out this high again, right? Or we could just dig into this wick a little bit, and then we could see a nice little sell-off. And I'll tell you why, right? We've had this soup right here, right, of this range of this leg. We souped this leg, and then we fell off, or sold off, right? So up here, there are no orders. There's nothing here, right? There's nothing here because we didn't even have a pullback really, right? On the lower time frame, I'm sure we did, but there's no orders up here. So what we want to do is go start creating a failure swing. Right here, we create one. Right here, we created one. This will give us a target once we come back in here, right? Shift. Now we have failure swings to target, right? So what I would like to see is us come rebalance this area a little bit, and that's why I have this red box because on a lower time frame, yeah, it's a daily gap on a lower time frame, right? So if we, if we can get something maybe here, this sell off, trust it. If you get this, trust it because I think you'll get you'll get a nice little sell off because look, the BOJ, the Bank of, oh no, I didn't mean to do that. The Bank of Japan, they're not going. Their economy is is in shambles right now, and it's going to have to figure out something. Somebody's going to have to bail out the yen. Don't know who it is. Don't know how they're going to do it. Not an economist, but it has to happen, right? Or otherwise, the yen is going to become virtually worthless. Nobody's going to be putting money in the yen, and you can't just let a currency, a fiat currency, keep continuously go to zero. This is real life. This is not a chart. So that's where we are there. Chef JPY, because the Swiss franc is on that list of the places that we have the tariffs. I expect the Swiss franc to dump. And if you look here, we ran the monthly, right? We ran the monthly already. We ran the weekly already, and on the daily, we haven't quite shifted, right? But for those that use things like the inversion fair value gaps or whatever, we've closed here. We could come back up here, and I would be looking to trade. I'm actually going to leave this on my chart. Um, I would be looking to trade off of this gap um, lower because I definitely think um, you know we could definitely see a bunch of lower prices, and then you have failure swings everywhere on a lower time frame. That's failure swing. That's a failure swing, right? These these are all failure swings. Um, I don't know how far we can go. These are all failure swings. So you have a bunch of targets, right? You literally have a bunch of targets. And actually, while I'm here, let me just put them on my chart. All right. So, and this is all I do, man. I just go, line by line, frame by frame, and we have failure swings, we have targets, and I think that we're getting ready to have a reversal um, here. So and this is why I had the Swiss franc pulled up, right? We ran quarter three's high. This was made on, yeah. We ran quarter three's high, quarter two. Actually, this might have been quarter two's high. No, it is quarter two. All right, so we didn't run I'm sorry, it is quarter three. We didn't run that quarter's high, but we did soup it, right? And then we're creating failure swings, failure swings, failure swings. Um, but we're creating failure swings at the bottom as at the lows as well. So I would expect again, I don't know if you're going to get a run up or not, but by this action right here, we could see, something. But I expect these lows to get ran before we come back up here and try to run for this high. And I don't know how long it's going to take. I don't know, you know, again, I don't try to predict that kind of stuff. I just react. Um, but for the most part, that's really what I have. Oh, the other thing I wanted to show you guys was CAD, right? Uh, the Canadians grew a pair, man, and I actually love it, man. They're doing deals with China. So they have they had an announcement where the Washington, Brussels, and the NATO capitals um they went over to Beijing. Mark Carney, he went over to Beijing, and he has a new strategic partnership with China, and they're framing it like a new world order type thing. And so what they're doing is they're trying to pivot Canada's energy exports, their critical minerals, their AI supply chains, their Arctic routes, the LNG trade, clean tech, right? And they're trying to move it away from the United States, right? Because of these alliance tensions. And so when you have that type of issue, right, that weakens North America. All right, Mexico already don't mess with us like that. Now Canada, right? They don't mess with us like that. But once you start allowing, right, your foreign, the enemy of my enemy is my ally, right? So once Canada starts doing deals with China and they start working there, then, right, that becomes ultimately a threat to the U.S. because you can have China come set up shop in Canada, right? You can have Canada come set up shut up. I'm sorry, Canada, China comes set up shop in Canada, China comes set up shop in Mexico, and we're enclosed from there, which is why I think part of this Greenland deal is something. They don't want Russia and China to be able to get so big that and to be strategically placed to where, well, we're weakened. But when you behave like you behave, when the United States behaves like it behaves, I don't you can't, you just can't expect the best results. So people have to do what's best for their own country, and I really don't have anything to say about that. But as far as the charts say that the dollar, the CAD is probably going to see some more downside. Um, I have on this weekly, right? We probably You'll probably see a move up maybe this week into this gap, and maybe some a start to decline. Um, or maybe it comes in here, or maybe it just soups this high into the gap, and we just start falling off from there. There's setups everywhere. I mean, literally setups everywhere. Even on my crosses, I usually don't talk about crosses here, but if you look over anything, the Euro CHF, Euro CAD, Euro New Zealand, Pound CAD, Pound New Zealand. Let me just go to something real quick. I like, man, these are just beautiful charts right now. So EuroCAD, right? So on the weekly, we had this sweep, right? On the daily, um, actually, let me move this. Don't need to see that on the daily. I have this set up, right? So on the daily, we could see some type of retracement to create the wick, the weekly wick, and from here. So I would expect to see something here, 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 and then for the week. So I'm looking to trade off of this area up here already. I already have this marked out. Um, Same thing for pound CAD. We ran the weekly, ran the monthly, and I just want to see lower prices, right? So if we go to, let me go to the monthly so you can see, right? There's our monthly, right? Our weekly, we ran that. And now down to the daily. We have a weekly gap. I don't expect this gap to hold. And then we have a bunch of failure swings here. So any type of divergence SMT between EuroCAD, PoundCAD up here, I'm on top of that. What's the other one? Euro NZD. Um, Same thing. Targets here. Failure swing, failure swing, failure swing, failure swing. Bunch of failure swings. And look, we've already ran the monthly, already ran the weekly, and then lower prices, right? So that's what I want to see there. Same thing for pound, right? In this tiny range, we ran the monthly, ran the weekly. I want to see lower prices, right? Euro CHF. This is tight. The reason you always see so much consolidation on CHF is because the Swiss franc has the most efficient currency, meaning that it does not deviate in price fluctuation too high or too low, a real standard deviation. So if you're standard, so for instance, a standard deviation is really, um, I guess quickly, I'll try to explain it. A standard deviation is if you're normally at about let's say how can I do this? How can I say this? Um, Man, how can I say this that it'll make sense? Well, okay. So if you're let's say your normal your normal currency range is uh, $5. Let's just say $5, right? Whatever. I'm just gonna throw a number out there. And your a standard deviation is that a standard deviation of two is that that your currency closes within 2% of that $5 range on average. No higher, no lower. So you really have a 2% standard deviation, and it closes in that percentage um, a certain percent of time. So it's kind of hard to explain without charts. So I'll leave that alone without graphics, I should say. So I'll just leave that alone for now. But anyway, not important. Just know that CHF is efficient. That's why you'll always see a bunch of consolidation on a CHF chart. It just it handles its business when it's like it's supposed to. That's why you never hear anything in with the Swiss franc of really having any issues, but it's been consolidating for almost 2 years. So, but I think you get some movement here. We'll get a little bit of movement here. But that's really it for this week. Sorry if the video was too long. Um, just trying to give a little insight. If you have any questions, whatever, you can find me on. Just find me however you find me. And if you can't find me, catch me next week. Um, so I'll catch you boys later.